Hello, hello. We had some civil issues today, so I'm gonna put a video on real quick and see if I can fix something about that. So I apologize for that. Today's video, I'm going to answer your questions. Any questions you have, this can be about investment, finance, anything coronavirus related, economy related, better understanding of owners' earnings and begin to use it yourself and evaluate companies yourself.
How to think in probabilities, not certainties. And that's essentially what you have to do as investors.
Today I'm going to show you everything about owner's earnings, how to calculate it, why it's so important, what goes into it, why it's one of Buffett's favorite metrics to use, how I use it to evaluate every single company I look at.
Talking about specific value investing concepts and techniques.
We're going to talk about why you must read companies' financial reports and why you cannot just rely on the numbers. Hello. Hopefully I'm back. So I apologize for that. Massive technical difficulties. My entire Chrome browser just shut itself down and restarted. So I apologize for that. Okay, let me make sure everything is up now that I need. Again, I apologize for that. Thought we had these technical difficulties figured out. Apparently not. And apparently it's because I'm the only one here today because Charlene is out. She's not feeling well today. So she sends her regards and she will be back hopefully next week. But again, I apologize for this delay. I'm trying to get everything back up after my entire browser just crashed. So I want to be able to make sure I can see your guys' comments and everything, and all that as well. Okay. Okay, well, I'm waiting for these last couple things to load up. Again, I apologize if you're coming in late. I apologize. I was late. I was on time, but I was late because my entire browser just shut down, and I had to reset everything. So I apologize for that. If I've got both comment threads open, if you have any questions, let me know. Again, Charlene's not here today. She's not feeling well, so hopefully she'll be back next week. Today, we're going to talk about meme stocks, Bitcoin, crypto, DeFi, NFTs, and more as it relates to the entire kind of spectrum of decentralized finance. What is decentralized finance? You might have heard this term. It's called DeFi as well, DEFI. What really is DeFi? What really is blockchain? What really is Bitcoin? What really are cryptocurrencies at all? Those are the things we're going to get into today. Again, before we get into anything though, if you have any questions, let me know. I have the tabs open now. Hopefully the browser doesn't crash again, but I have the tabs open. But today we're going to start off with what are meme stocks and why to avoid them, including a real world example back from earlier this year. Okay. So if you've been in the finance investment stock space for any amount of time and you're pretty much anywhere, especially like back in February, March, when meme stocks like GameStop, AMC, and there were a bunch of others were going crazy, literally going up hundreds, thousands of percent in days or weeks time. What is a meme stock? A meme stock is any stock that people on Reddit and other bloggers, other people online have taken a liking to. And the goal, again, I'm not in on these meme stocks, so and in these groups. So to my understanding, this is what people are doing with these meme stocks. They find a stock they like, let's say GameStop, and they not only want to push it up and buy a ton of the shares to make money off of it, but they also want to punish the hedge funds for short selling these kind of stocks. I talked a little bit about short selling in the last couple of videos, but I'll do a quick recap here in case anybody, or in case you weren't on those videos. Short selling is when a company essentially bets against a stock or bets against an index. You can bet against, you can short the S&P 500, for example. You can short individual stocks. Why do people do that? Most, again, big hedge funds do this because they think there's something wrong with the valuation. They think there's something wrong with the company. They think there's something wrong with the business model, and they think the stock's going to go down, so they want to benefit from that. That's what most short sellers do. There's nothing nefarious about that. I don't do it. I don't short sell ever, which I talked about. I think it was the first Facebook Live a few weeks ago. I don't short sell ever because of the enormous risk and the leverage, the negative leverage in most cases, and the timing of the market, which I frankly suck at. So I don't even play the short selling game. But that's why people do it. Most people don't do it in a nefarious way. They just think they can profit because a stock is doing something maybe fraudulent, like Bill Ackman a couple years ago with Herbalife. What these people in the Reddit groups and the bloggers and the investing people though online are doing with these meme stocks is they find a stock they like GameStop. Sorry, they not only want to make money off of it, but they want to punish the hedge funds for short selling their beloved stock. I'm all fine for that. If you want to punish billionaires, go for it. They can handle it. I don't agree with what happened with Robinhood and those kind of companies, with what happened, and they shut down the exchanges so you can buy and sell and trade in these positions so that the hedge funds could catch up and minimize their losses. That's disgusting to me. So Robinhood got all the flack they deserved for that. But I'm giving all this context to tell you what meme stocks really are. Said that. What's an example of a meme stock? Let's go with GameStop. GameStop, I think, again, this was about February, March of 2021. And GameStop stock was going crazy. It was going up hundreds, thousands of percent per day. And at one point, I think it was up from like, I think this is right, $4 per share up to like $400 per share, something like that at one point. Many people that I know who know I'm in the investment realm were asking me if they should get on these meme stocks, AMC, GameStop, and some others. I said, no, you shouldn't get in on them, because if people are getting in on them late and you don't know what you're doing, you're going to get crushed. The real world example is my brother. He asked me about GameStop when it was 140. Again, I don't remember the exact numbers, maybe $140 a share, something like that. It went up to something like $200 and then it crashed massively. So I sent him a text being a little bit of a smart ass brother. I said, I just sent my brother a text saying, "You're welcome." He said, "For what?" I said, "For saving you a bunch of money, not losing on GameStop." I did that sarcastically, again, kind of a brother to brother dig thing. But you should not invest in these meme stocks because they are ultra volatile. And unless you are one of the people on the in on Reddit, you don't know when people are going to start selling. And if you don't know when people are going to start selling, if you buy on the way up, hoping it's still going to go up, but you don't know when it's going to kind of crash, because everybody on Reddit saying they're going to sell their positions, you're going to get crushed. If you would have bought at the top, and I'll bring up my stock chart here for that time frame so I get the numbers correct. So bring this up on my other screen. I apologize for this slight delay, but I want to make sure I get the numbers right. Oops, year to date. Okay, so it shot up from like $40 a share. I had that right. All the way to almost $400 a share, about $350 a share, and then it crashed. So when my brother and my other friends were reaching out to me, it was, I think, between like $150 and $200 a share. And then it crashed like immediately. And I can share my screen. Start sharing screen. Screen 2. Haha. So you see this huge bubble over here. If you bought here on when you were kind of, again, on the in, when it was $18, $20 a share, something like that, you would have made a ton of money, obviously. But most people ask me about buying. I would show you the price range, but it jumps from like $80 a share to $100 a share. So let's go somewhere in this neighborhood. It jumps drastically. And this is when most people right here were asking me if they should buy it or not. Then it went up, and they, of course, were not happy with me. But then it crashed. The bigger thing is you see this volatility up and down, and the crashes and the ups and downs. Volatility in itself is not bad. I actually don't mind volatility. Most people can handle it, though. Most people, if they see something go up, they freak out and they wonder if they should sell. And then if it goes up more, they should wonder if they should sell even more, or they wonder if they sold too soon. The reason you shouldn't invest in these meme stocks is for this volatility that I just showed you, because nobody's good at timing the market. And again, unless you're one of those people on the Wall Street Bets chat that are at the high level kind of leading the thing, you won't know when to get out, and you're probably going to get crushed. Another reason you shouldn't own for specifically GameStop is it's a terrible stock. I've actually personally evaluated the stock, and that's another reason I told my brother and my family and friends not to invest in GameStop, because I had evaluated, I think in January, before it took off. And it's not a good stock. At the time it was unprofitable. I don't know if it still is. I'm assuming it still is. It's unprofitable, has a lot of debt, does not have a lot of cash. The margin of safety is not there. Plus, and these are all bad kind of to start. Plus, on top of this, its entire business model is dying. I grew up with GameStop, going and buying and selling and trading games in there, video games in there. That business model is dying because you can stream games now. You can download games off the internet because internet speeds and disk drives, hard disk drive space is enough. You can download games. You don't have to go in and buy and sell trade and games anymore. So that business model is dying, and they're trying to transition their entire business model. 9 out of 10 times that does not work. Look at not GameStop, Blockbuster and Kodak as two semi-recent examples of companies that tried to transition late to a business model, from a business model that was dying to a different business model. They ended up dying. 9 out of 10 times when a business tries to transition their entire business model that they've done for years, decades, 9 out of 10 times it does not work. So when it comes to GameStop, I do not recommend you invest in GameStop specifically, even though, again, you can see on the other chart, it's still going crazy. This year, it's up 762%. In the last 6 months, 228%. In the last 3 months, it's actually down 1%. But the lofty valuation, lofty share price it has right now makes it massively overvalued on top of all these things, which further lowers the risk and makes the investment more dangerous. So there's huge risk. What I'm saying here is there's huge risk in GameStop and these other meme stocks that lowers your potential for return and increases the odds you're going to lose money. That's why I say you shouldn't invest in meme stocks, because my number one rule, pretty much anybody's number one rule when it comes to investing, in my opinion, should be to preserve capital. That's my number one rule. To preserve capital. I learned that from Warren Buffett. His number one rule, don't lose money. That's my number one rule as well. Now, you might be thinking, what if I trade? I don't have an opinion on trading because I don't do it. Frankly, because I suck at it. And it's been shown over history that even the best traders in the world, let's say George Soros is probably the best trader ever, he doesn't win very often on his bets. But when he does, and he bets big enough to make up for his other losses, that takes hundreds of millions or billions of dollars to do over time. If you trade in and out of stocks, it increases your transaction fees, it makes your tax rate higher, and it increases your odds of essentially picking a bad stock, because essentially it's impossible to time the market over the long term. Nobody can do it over the long term. Yes, in the short term, there are things that you can do and say, or that you can see and say, hey, this is coming. Like, for example, I've said the stock market's overvalued, but I've been saying that for 5 years now. So the timing aspect of things is the hardest part. And again, pretty much nobody's good as that. So in my opinion, those are reasons I don't trade. If you trade in and out of these stocks, good luck. Seriously, I don't short sell, and I don't have any ill will against people that trade. Good luck in all sincerity. But I don't have an opinion on trading because I don't do it. Okay. And again, wish Charlene was here. She does a far better job of answering and asking these questions for me. But if you have any questions, and hopefully I am in the right spot on Facebook, I am. Don't see any comments on Facebook. Don't see any comments on the YouTube stream. If you have any questions about anything, let me know. I'll answer them throughout this video as we go through things. Usually, again, Charlene is here to help me kind of read the comments, but I'm going to have to go back and forth today. But if you have any questions about anything I'm talking about or anything that I'm not talking about, let me know, and I will answer those questions. So, next question. What is Bitcoin, and should you invest in it? Bitcoin is one cryptocurrency, and I think there's like 40 or 50 cryptocurrencies right now, and there's probably dozens or hundreds in development. And it's the most famous, it's the most well-known. What is a cryptocurrency? It's a currency made with technology that is not controlled by the government or Federal Reserves worldwide. In theory, I love Bitcoin. I love cryptocurrencies because it's not regulated by the government. It's essentially decentralized finance, which we'll get into and answer what exactly that is. And the more decentralized things are to me personally, the more it makes sense. Because frankly, I don't think the Federal Reserve has done a great job in the US of managing the money supply and avoiding bubbles. I think they've done a pretty horrible job of that actually in the last 100 years. As we're seeing now, when the next bubble crashes, it's going to be really bad because they have no options left. As we kind of talked about last week, Debt levels are at all-time record highs for governments, corporate debt levels, student loan, credit cards, auto loans, all at record highs because in part to the Federal Reserve and their policies. Interest rates are super low, so you can't keep lowering interest rates if and when the next crash does happen. With Bitcoin, Bitcoin was created in part to take this control of the money supply out of the hands, or eventually out of the hands, of governments and the Federal Reserves worldwide. So they couldn't do things like devalue dollars, inflate things, and hopefully prevent more bubbles and frankly just get more control in people's hands. Love it in theory. I actually don't mind it in practice either. I don't own any cryptocurrencies though, for the same reason I don't own gold and stock, or gold and not gold and stock. I do own stocks, gold and silver. I don't own these precious metals and cryptocurrencies because I want assets that produce cash flow. I want assets that are like stocks. I want assets that are private businesses. I want assets that are apartment buildings and other commercial real estate. I want businesses that pay me money essentially every month that I can redeploy elsewhere. Why do I want that? Because that provides enormous safety. What the downsides to me of Bitcoin, especially or specifically, are, this is another main reason I don't buy Bitcoin. It could be worth $1. It could be worth $1 million. Nobody knows what it's worth. If I can't value something and it doesn't produce cash flows, and that's why I can't value it, because I can't value something that doesn't produce cash flows, I don't own it. If you like cryptocurrencies and Bitcoin and this kind of stuff, to me, I put it in kind of, again, the gold, silver category. If you own 5 to maybe 15% of these assets in your portfolio, in your overall portfolio, so 5 to 15% of your portfolio is in these assets specifically, that makes sense to me. If it's more than that, that's incredibly risky, as we've seen with Bitcoin rise from $10,000, $20,000 to $60,000 and then crash. I think it will keep going up in time, but again, I don't know if it's worth $1, if it's worth $20. I just don't, because I can't value it because it doesn't produce cash flows. El Salvador, okay, see people commenting or liking and stuff. Thank you for watching. Really appreciate it. Again, if you have any more comments, questions, concerns, let me know and I'll answer them on YouTube and Facebook. I don't see any right now. But those are the reasons I don't own Bitcoin. For the same reasons I don't own Ethereum, Dogecoin, any of this other stuff. Because essentially to me, they're speculations. Again, and if you want to speculate with 5, 10, 15% of your portfolio, that's fine. One thing I do tell people about these things is whatever you do invest in them, you need to be comfortable losing 100% of your money. And when I say comfortable, like it's not going to put you out, like you're not going to lose your house type of thing. The area where I see people get in a lot of trouble with this kind of stuff is, and this is throughout history, this isn't just in recent times, this has been going on forever with all the different various bubbles, going back to the tulip bubble back in Netherlands back in the 1600s, I think it was 1619, something like that. This has been going on for decades, hundreds of years. Bubbles will continue to build, crashes, and then and this is accelerating as new technologies and innovations happen. That's why I don't like Bitcoin. However, another reason I don't invest in Bitcoin and other cryptocurrencies, because I don't think it's going to be the most important technology that comes out of Bitcoin and cryptocurrencies. I think that's going to be blockchain, which is what Bitcoin is hosted on. The blockchain, what is the blockchain? You might have heard that as well. Blockchain is, I'm not going to explain the jargony nerd stuff. Sorry, I was going to do that. I'm not going to do that. The blockchain, the easiest way to think of the blockchain is it's a ledger. And I learned this from one of my colleagues at an investment newsletter I used to write for. It's like a ledger, and it keeps records of every transaction on whatever the asset is. So let's say you have Bitcoin and you sell to somebody, and then they sell to somebody, and then they sell to somebody, blah, 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 blah. It'll keep a ledger of those transactions, encrypted ledger that supposedly is unhackable, which if anything is unhackable, the words, and this works for investing, this works for life. If you ever hear the words always or never, be very skeptical. When blockchain first came out, it said it's impossible. That's another one. Impossible to hack. Just literally last week, I think, I saw somebody 614 or $640 million of Bitcoin had been stolen because it'd been hacked. But blockchain is supposed to prevent a lot of that and that kind of fraud because it keeps the ledger of everything. Again, I'm not going to get into the technical details, frankly, because they're boring and they are incredibly convoluted. So, but that is the overall promise of blockchain. The reason I love blockchain is not necessarily for that, although that's important. I think the blockchain is going to transform our entire world for the better. How? Let's take agriculture. Companies are building out agricultural blockchains right now. So companies can track from the fields and the farms to the transportation, to the stores, to a person's home, allegedly. The entire process of, let's say, a tomato. Why is that important? Because if they can track the entire process of a tomato from the farm to your dinner table, they can track if things are missing. They can track where they went missing or if they got stolen, who had control of them last. They can also detect when things might be going, when a tomato might be going, being close to going rotten. They might be able to detect if a certain type of tomato, certain strand of tomato type. I'm not sure. I'm not a farmer, so I don't know the terminology. So I'm butchering this. I'm sorry. But a certain type of tomato, they might be able to tell that people are buying that more. So we should produce more of that so we can sell more of that in the stores. There's all sorts of different kinds of things you can tell with the blockchain technology. Plus, it would also prevent more fraud, more waste, more theft, which will, in time, the theory is, decrease prices, increase output of the tomato in this case, on increase output, which will then enable us to become more efficient and feed more people as the world's population continues to grow. These are all great things. And it's already happening. And again, I just use the tomatoes as an example. There are blockchains being built up for the entire range of agricultural products, corn, I think even livestock, all throughout the supply chain. Again, the more efficient a supply chain is, the more profits there are generally, the more you can lower prices, the more output there is, the more productivity there is. Again, that's better for all of us. That's cool. Again, to me, maybe it's not to you, but it's cool to me. Why that's important, though, is because there are blockchains being built out in pretty much every arena throughout the world. Contracts, defense, finance, which gets us to DeFi in a little bit. For example, let's say you have a mortgage, and you want to buy a house. Instead of the entire 30 to 60 day long process it is now, again, the promise of this, the reason I keep saying the promise or the theory of this is to increase efficiency, increase time, lower costs, all that stuff. The reason I'm saying it's in theory is because a lot of this stuff is still being built out now. It's coming and it's already being implemented. But in finance, let's say you have a mortgage. You want to buy a house instead of the 30, 60 day long process that there is now. Maybe you could speed it up to 5 to 10 days. Again, that's the theory. Speeding the entire process up, increasing profitability, increasing output, all that. I think blockchain is going to transform the world in the coming years and decades. So should you invest in blockchain stocks? Right now, I would say probably not, unless it's a bigger blue chip. And again, these are not investment recommendations, but I have spent a decent amount of time covering these stocks for investment newsletters and sites that I've worked for. Unless they're companies like American Express, Visa, MasterCard, essentially huge names that are not going to go away. They're not going to go bankrupt. And again, do your own research. This is not a recommendation. Do your own research always. But unless you're investing in something like that, I would not invest in the startups doing blockchain, because these companies have been around for years. They have billions and billions and tens of billions of dollars to not only build these blockchain infrastructures out, but they also have the contacts, the research capabilities, the development capabilities, because of the capital they have. So I would not recommend buying smaller blockchain companies in any industry right now, at least not any that I've come across. The better blockchain companies that I've come across so far are, again, these kind of bigger blue chip companies, mainly because they have the capital and the capabilities to continue building this out well and efficiently. But I do think it's going to transform the world. Why don't I specifically recommend you invest in smaller blockchain stocks? We got into this a little bit last week, but typically they're saying in investment and finance that if you've heard the term the first mover advantage, you probably think it's great to be the first mover advantage and to be the first in the industry and kind of break through, and because you get the biggest profits. That is true in some cases. It is not true in most cases, though. There's also a saying in finance that those who go first, the explorers that go first, get the arrows in the back, meaning they have the most problems and they fail in large numbers. And that's, in my experience, mostly true. A real world example of this is MySpace. Came through, exploded, dominated, didn't innovate fast enough, didn't keep compounding its cash flow and developing things. Facebook comes along and then skyrockets and just destroys MySpace. That's an example of this. And especially with these smaller blockchain stocks, they don't, again, have the capital. They don't have the capabilities. So many of them right now are unprofitable. And if you're unprofitable, yes, you can sustain that for a little while by issuing debt and issuing cash, doing stuff like that. But eventually that runs out, and you have to produce profits and cash flow at some point, or you're going to go bankrupt. And most of these companies will go bankrupt at some point, unfortunately. That's another reason, honestly, that I would steer towards the bigger companies, though, too, is because when these companies do go bankrupt, and again, I don't want them to, but that's just what's going to happen based on what happens historically in these kind of new innovations, new technological changes. Bigger companies, they have the capital and the capabilities to develop these things. They also have the capital and the capabilities to buy these assets and buy these sometimes breakthrough technologies on the cheap when they do go bankrupt. Or if they are struggling, then they can buy them out before they go bankrupt. So I do not recommend investing in smaller blockchain companies, bigger blockchain companies. Again, do your own research, but if you do want to invest in blockchain, I would invest in bigger companies. Again, I think it's going to transform the world. But this goes back to, I think, what we talked about in the first Facebook Live we did a couple weeks ago. First recent Facebook Live we did a couple weeks ago, is even though I love this kind of technology, frankly find it fascinating, and I see it coming, I typically don't invest in these kind of things because of the enormous risk. When I mean enormous risk, let's say there are 10 smaller blockchain companies, based on the historical record, kind of what happens over history in new technological changes and innovations, disruptions, if you want to call them that. Only 1 or 2 out of 10 kind of take off and skyrocket, and they become the Facebooks and Ubers of the world, the Googles of the world. Most of the rest of the 7 or 8 or 9 either fail miserably and go bankrupt real quick, or they just kind of do okay and they get bought out. So it's hard to pick the winners at this early stage. And again, 9 out of 10 times being wrong, the odds are not in your favor of picking the correct small stock. And again, I even know what I'm doing, and I don't invest in this because of how much risk there is, and the odds being 9-1 against me that I'm going to pick something right. So I do not recommend investing in blockchain stocks for that reason. Again, even though I think it's going to transform the world. Checking Facebook. Don't see any questions or comments yet. Hopefully this is working. I see things coming up. I see the engagements and stuff like that. Thank you again so much for watching. If you came on late, Charlene is not here today. She's out sick. Hopefully she'll be back next week. So I'm handling all these duties myself. If you have a comment, let me know. But I have both pages up and I'm not seeing anything. Let me see if I see anything on. Funny comment from Steve. Steve, I'm not going to say your last name. Steve K. Used to ever saying everybody's last name. Funny comment from him in a Facebook Messenger. Not a funny comment, or not any comments though on on Facebook or YouTube yet. Steve K. Thanks for watching. Len, thanks for watching. Dennis, thanks for watching. Again, if you guys have any questions on anything, let me know. I would love to answer them for you. On to the next question. Okay, we've actually, so this gets us to, what is DeFi? I said at the beginning, I'm going to answer what is DeFi. What is decentralized finance? But I had to give all this context because, again, this is all these concepts, blockchain, Bitcoin, cryptocurrencies, DeFi, they're all kind of vague to most people. They don't make sense because they're hard, because frankly you can't see them. It's not like this phone. You can see this phone, right? You can't see a blockchain ledger unless you're a computer coder or developer. You can't see a blockchain ledger noting every single transaction and encrypting it. And it's kind of hard to see in your mind, at least for me. So what is decentralized finance? And again, that's why I had to explain what all this stuff was to get to this. So what is decentralized finance? Decentralized finance is essentially parts of all of these things, except for not necessarily the meme stocks, Bitcoin, cryptocurrency, and blockchain. It's parts of all these things. DeFi is the overall kind of idea of decentralized finance. Again, what is that? That's taking the idea of taking more control away from governments, Federal Reserves, banks, big banks specifically, and putting it in the hands of all of us. How does that look like? An example of decentralized finance is paying. I don't have an Apple, but so I have Google Pay, paying with my phone, touchless, going to a touchless thing, and paying with my phone. Using your Apple to go to a touchless cash machine, hitting it, and paying. That's an example of decentralized finance. Decentralized finance is going to put more power in all of our, the idea is to put more power in all of our hands, meaning, quote unquote, normal people, not governments, not banks, not any of that kind of stuff. I love this idea. Again, because I think most people in general are smart enough to make their own decisions. And hey, Tasha, I see a comment from you. Are we going through inflation? No. Thanks for showing up. We are going through meme stocks, Bitcoin, crypto, DeFi, and more today. Last week we went through crypto. So hope that helps, guys, to see you here again. Thanks. And reach out to me if you're on here. Reach out to me. Because I think you might have left. But reach out to me, Tasha, at jasonrivera@valueinvestingjourney.com to ask or to set up your free live trainings, because you asked so many great questions last week. I offered some free live trainings. If you still want to do that, let me know. I'd love to, as a thank you to you, I'd love to go through some free live trainings with you on Zoom, where we can talk about anything you want to talk about, and I'll help you through whatever issues or problems you have. Again, as a thank you for asking all those great questions last week. Thank you so much. So getting back to DeFi, what DeFi is all around us. It's the early example of DeFi was Square when it first came out with the plugin you put in your phone and you swipe a card. That's an early example of DeFi. What the future examples of that are still kind of to be determined. But as long as it puts more control in our hands, that will be better, because again, in my opinion, governments have not done a great job of this. I don't think I explained that well enough, and I'm sorry. But again, these concepts are kind of, the concepts are kind of vague. I'm actually going to go to a definition. Decentralized finance. So I actually explained it pretty good. Because the definitions I'm seeing over here are exactly the same thing. So let me go to other examples of as finance. E-wallets, cryptocurrencies, NFTs, which we're going to talk about here shortly. Those are examples of decentralized finance. So again, taking things out of people's hands or government's hands, Federal Reserve's hands, putting them more in our hands, letting us take more control. And this, again, is all tracked on the blockchain. It's all tracked worldwide. And this, again, yes. So the big banks, you're probably worried about the big banks, Visa, MasterCard, and American Express. They're not necessarily banks, quote unquote, although American Express to a degree is because they have a holding company. They're a bank holding company now. But they will end up controlling a huge part of this. That's not good or bad. That's just what's happening based on what I'm seeing. So that means every time you use your Visa card, whether it's a crypto-backed card, which there are those now for all, I think all these companies, definitely for MasterCard and Visa, I know there are. You can use your crypto-backed Visa card to pay for something at your local retailer, and that transaction will be locked, or that transaction will be tracked on the blockchain. So to prevent fraud and create efficiencies and more productivity and blah, 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 all the stuff we talked about earlier. So again, if you have any questions before we get to NFTs, let me know. But this decentralized finance is going to transform our world. It will transform, in my opinion, everything from defense, agriculture, banking, contracts, pretty much any contracts, how we buy and sell things. It's going to change our world enormously, in my opinion, from what I'm seeing. Especially since with the promise of 5G, we're going to be able to be online all the time. So let me check again. Any comments? I don't see any other comments. So let's go to NFTs next. What are NFTs? Stands for non-fungible tokens. These are things like digital assets, pictures. I think some are like music, videos, but there's only a limited amount of them out there available. Let's say 1 to 500,000. It depends on what the person putting the NFT out wants to do. To me, the easiest way for me to think about these is when I was a kid, me and my brother and our friends would buy and sell and trade sports cards, baseball cards, football cards, all that stuff. To me, this is like a digital version of a trading card. And on some of those trading cards, there were limited numbers, like say 1,000 if it had a signature on or a piece of football or something in it. There would be only 1,000 made. To me, NFTs are similar to that. They're going to be able to be traded online on the blockchain, where everything's again tracked. And there will be limited numbers of these. I just saw Coke put out their first NFTs. I think it was last week or the week before. And these, I think they had different versions, but there was a digital picture of a updated version of their, I think it was 1950s or 1960s vending machines. They had sold that as NFT, and the proceeds went to auction, or the proceeds of the auction went to the Special Olympics, I think is what it was. So companies are using these for marketing purposes, of course, and to get their name and publicity out there, and also to raise money for causes and make money. You're going to see this more, frankly, because everything we're doing now, for the most part, is digital. And it's a way for companies to monetize their assets in a more, and I don't know if necessarily efficient way, but it's a better way to maximize everything they have. If you have something that is collectible, or you make it collectible, you can sell it, raise proceeds, and earn extra cash from that. That's the way I see NFTs. That's also why I don't invest in them at this point either, because frankly, they don't produce cash flow either. This goes back to the Bitcoin stuff. They don't produce cash flow. This NFTs to me are like art, or even like sports teams. And it goes back to what's called the greater fool theory. That's not a made up thing. That's not a condescending thing. That's actually what the theory is called. The greater fool theory is essentially you buy something for one price and you hope it goes up in price so you can sell it at another price. Again, NFTs, trading cards, sports teams, kind of to art, kind of falls into this for me, this kind of category for me, because again, they don't produce cash flows. Now, does that make them bad investments? Not necessarily. If you enjoy the art, the NFT, the sports team, especially for art and NFTs and sports teams, if they are good, high quality stuff, there's truly a limited supply of it, they'll probably go up in value in time. I don't invest in them because I don't know enough about them. And for sports teams, even though I'd love to invest in, say, the Jacksonville Jaguars, which is my team. Yeah, I know, boo. They got Trevor Lawrence now, though. So hopefully they're all right in the coming years. I don't have billions of dollars to buy a sports team, or I would. Yet. That's the plan. Yet. That's one of my plans. We'll get into that maybe in another video. But that's why you need to be careful right now as well with NFTs, because again, are they truly collectible? Is the asset something you want to buy? Is that something you want to have ownership of? Think of this again like art. Do you want to have that piece of art, or do you just want it because it's expensive and you expect it to go up in price? Do you want it for both? That's only a question only you can answer, frankly. But for those reasons, I also don't invest in NFTs at this time, although this probably is the closest thing that I would buy out of cryptos, out of small blockchain stocks. This is probably the closest thing I would buy, but frankly, I can't even think of something I would buy that would be an NFT, because then again, I would have to trade it, I have to sell it, I have to do something with it, display it somewhere. I don't even know. So haven't gone down that thought process yet. But for that reason, also, you need to be careful investing in NFTs. Again, not just for those reasons, but because it's essentially brand new. This year and last year were the first time NFTs kind of came out, or at least were known by most people in the mainstream. So you need to be careful with them. Just again, anything that is kind of new-ish. Again, even I love technology. I love innovation. Love all this stuff. Find it fascinating. But when it comes to investing your money, you need to be careful with it. So we've answered all of the questions I have that I've been getting on blockchain, NFTs, decentralized finance, crypto, Bitcoin. We've answered all the questions I have, or I've been getting at this point. So if you have any questions about anything, if you have any thoughts, if I missed something, if I should explain something better, let me know. This went fast. Normally these things go hour and a half, but again, Charlene's here to kind of facilitate that. Apologize for that. So if you have any questions, seriously, let me know. Because if I don't get any questions, I'm not going to sit here and ramble for another 20 minutes or so. If you have any questions at all, it doesn't have to be about these topics. It can be about anything other, investment related, finance related, all that stuff. Let me know as soon as you can. I do know there's a bit of a lag between my feed here that I'm looking at and the Facebook and YouTube feeds. So I'm going to give it some more time. So I said pretty much, even though I love this stuff and find it fascinating and agree with it and all that, I'm not really investing in it for the reason I talked about. It doesn't produce cash flow, hard to value, impossible to value, all that stuff. Why? And I talked about this a little bit earlier, but why will I not invest in this stuff? Again, I see it coming. I find it fascinating. I enjoy it personally. I'm not investing in it. Why? For part of the reasons I talked about earlier, the first mover advantage stuff, the greater fool theory, biggest reason is because until this stuff becomes proven, and again, I think blockchain is going to transform the world, for example, but until it becomes proven, until companies, and by that I mean until companies become more profitable, until I can value them on a easier and better basis, I'm not going to invest in them in large scale. If I find an individual investment that I like, then I might. But in kind of general, I won't invest in them for that reason. because if I can't value them, if they're not profitable, if they're not producing cash flows, that makes them enormously risky. And I am an enormously risk averse investor. How risk averse am I? I haven't invested in a new stock in 6 years. Why? Because the valuations have been high and they keep going straight up. I can't find anything to buy when it comes to stocks. I have found stuff to buy that fits my criteria, but it's been overvalued. And when I was going to buy last year, when the COVID crash happened and the stock market crashed at a rate never seen before in history, I put in buy orders for the first time in about 5-6 years. None of them got filled though in the portfolios I managed because the stock market went up so fast that I couldn't buy. So what does risk have to do with valuation though? You might be thinking. When something has enormously high valuation, like a lot of the blockchain, like a lot of the DeFi, like a lot of the meme stock stuff and the overall stock market right now, it makes it not only riskier because it's more likely to go down from here. It also, and that risk also lowers the amount you should expect to earn owning that investment in the coming years. So let's take the stock market, for example, which is at or near, it's either at or it's at the second highest level ever in stock market valuations. Meaning the risk is super high because the valuations are so high, which lowers the amount you should expect to earn because there will likely be a crash relatively soon. Again, I don't time the market, so I don't know when. And I don't project when because, again, like I said earlier, I suck at it. But when the next crash does come, because the valuation is so high, the bubble's going to pop and stocks are going to fall probably pretty hard. And that's going to lower your return for potentially a long time. For those same reasons, I don't invest in meme stocks, Bitcoin, DeFi, NFTs at this time because the valuations are absurd. In general, the valuations are absurd when you can value stuff. And again, for Bitcoin and this other stuff, you can't value it a lot, in my opinion. Yes, there are ways to value Bitcoin, but they're incredibly convoluted. They're incredibly finicky. I had a friend back at an investment newsletter years ago that I wrote for, and he kind of specializes in this stuff now, Bitcoin and analyzing Bitcoin. And it took him months to figure out kind of an estimated valuation for, I don't know if it was Bitcoin or something else, another cryptocurrency. And I said, when I was just thinking, I was like, I can value a stock, and if I have the information in literally 30 seconds. So that makes no sense to me. If it takes a super smart person that I respect enormously months to come to a kind of a guess at what the valuation was, that doesn't make sense to me. And again, because I don't know what the value is. It could be worth $1 million, could be worth $1 million. Where am I buying at here? Am I buying on the safe range? Am I buying on the overvalued range? I don't know. And that also increases my risk. And I am, again, incredibly risk averse when it comes to any investment. This goes for stocks. This goes for commercial real estate that I'm looking at. This goes for businesses that I'm looking at to buy. I'm incredibly risk averse. Years ago, when I analyzed my stock information, my stock data, for every 1,000 companies I looked at, I ended up buying one stock for every 1,000 companies I looked at. That's how strict my criteria is. Am I saying you should do that? No, not necessarily. That's just what fits my personality, what fits my biases, what fits my perspective, all that. But for those reasons, I don't invest in these things. So what do I recommend you invest in right now? I get this question pretty much at least once a week. Jason, you're known for your stocks, you're stock investing, you manage portfolios, but you say not to necessarily invest in the general overall stock market right now, which I invest in. Here's what I tell most people. This goes from students up to people that I've talked to in their 30s, 40s, and 50s. For retirement people, this advice is a little bit different, but what I recommend for anybody is to invest in yourself. What do I mean by that? I'm super cheap. I never buy anything unless it's for my personal education or like to take my kids on a vacation, take the wife and kids to vacation or to go eat food. I'm an experienced guy. I don't buy stuff
When I buy stuff, it's like books. It's literally like books. That's all I buy myself. What else I invest in is my education, learning valuable skills, improving my knowledge, mindset, outlook, all that stuff. That's what I invest my time in and my money into, is investing in myself and my team and growing our knowledge, our capabilities, so that I'm more prepared when the stock market crashes to take advantage, to make money, to protect the wealth of the portfolios I manage, so that I'm prepared to do that. That's what I recommend you do as well. So how do I recommend you do that? And I think 2 Facebook Lives ago, I said there were 4 skills. There are 5 that I recommend people learning: speaking, writing, marketing, sales. Those are the 4 I mentioned in that video. There's also a 5th: learning financial literacy and investing. If you have these 5 skills, not only can you make money with the first 4 skills, but then you can multiply it with the 5th skill and keep your money, with the goal being to get out of and stay out of poverty, and to grow your wealth. Whatever your goals is. If you're in poverty, to get out of and stay out of poverty. If you already have a little bit of money, to grow that and multiply that for your grandkids, your kids, your legacy, whatever you're building it for. The 5th skill, again, the 4th skill I can't really teach on, although I probably could. I don't have courses or anything like that. For that, I've learned a lot of that stuff myself, or been taught through various other courses that I've taken or been given access to. For the 5th skill, I can help you with. We've recently relaunched our masterclass, our value investing masterclass, where you can learn anything and everything you need to know to find value and evaluate stocks, to find great stocks like I do, fast. How fast? These processes that you'll learn in this course help me evaluate 3,943 stocks in 40 days in 73 countries in only 40 days. Turning over rocks, Warren Buffett has the saying, the more rocks you turn over, the more likely you are to find great investments, because you spend so much time going through crappy investments. You know what a great investment looks like when you see it. I think he says it should smack you in the face or something like that, is what he says. When you see a great stock, it should smack you in the face. I think him or Charlie Munger say something like that. How do you do that, though? I've been doing this for 15 years. I've built this process up over 15 years, and I teach you this process in the Value Investing Masterclass. Why should you listen to anything I have to say about investing or finance or whatever? For those of you that may not know who I am. In the first 9 years of my career, I produced average annual investment returns of 23.5% per year in the portfolios I manage. This puts me just behind the great Warren Buffett in the first 9 years of his career at the Buffett Limited Partnership, where he produced 24.2% returns per year. He's greatly known as the best investor ever, right? And that puts me just behind him. And my numbers legitimately make me one of the best stockbrokers in the entire world over the last 9 years. I'm not saying that to brag. Frankly, it makes me a little queasy to say that because I don't like talking about myself like that. But I feel like I have to prove to you that I actually know what I'm talking about a little bit. I'd love to help you learn these same skills as well. So again, so you can get out of poverty, protect your wealth, and then protect your wealth from the next crash, and then also grow it as well. To find out more about our masterclass, go to the links below. There will be a link in the comments section on, I think, Facebook. No, on Facebook, we're having issues. So on Facebook, if you want more information about the masterclass, say yes or I'm in, and I'll DM you the link, or I'll send it to your email after I get your email. And if you're watching on YouTube, maybe you're watching this replay, maybe you're watching one of the other videos, I'll put the link in the comments on so you can go get more information about the masterclass. But and we'd love to have you in there. We just recently relaunched. We'd love to have you in there. I don't see any comments. Went through that whole spiel, waiting for comments. But we're at the hour mark now, and I don't see any more comments. And so I'm going to wrap it up here, guys. Again, Charlene was out sick today, so we went through this a little bit fast. I apologize for that. Didn't think I was going to get through as fast as I did. Apologize for that. But we will be live again next week, where we'll be talking about a to-be-determined topic. I think Charlene and I are working on the topics now, and we're going to have some down. We just haven't settled on what we're going to be talking about next week. I will send out invites to that, send out information for that, and set up the live for that so you can see coming. So you can maybe plan around it if you want to join. If you have any comments, again, last chance. If you have any comments, questions, let me know here real quick before I get off, or otherwise, if you're watching replay or I don't get to this by the time we get off because there is a lag, put it in the comments and I'll answer it in the comment section on YouTube and Facebook. I hope you found this enjoyable. Hope you learned some stuff. Hope you found it entertaining a little bit. Talking about convoluted topics with the finance nerds. Relative. Hopefully you enjoyed some of it. Hope you learned a ton. And if you want more information about our masterclass, make sure to check out the links below or DM me again. Say yes, I'm in on Facebook, and I'll send you more information. But until next time, have a great day. Talk soon.